Hello and welcome to Investing Confidential. Remember the famous words of the Terminator? I'll be back. That's what's happening with inflation. I think I mentioned this to you guys months ago. I don't make that many videos anymore. I probably should make more. I told you this inflation is not going away. Okay. I'll be back. That's what it said. And this is why I've been saying. And the bottom line is that if I could have kept telling you this, so it's blue in the face every day, every week. Okay. But again, with all the fake data coming in, and I'm tired. I'm not going to pussyfoot around anymore. This data, folks, is fake. Okay, it skews positive. It's not accurate. The way they gather the data is terrible, and it always, especially now we're in election season, it's going to skew positive. So when data comes out like this, CPI today very negative, you got to scratch your head. Not supposed to be negative. Okay, and inflation is back. But we're going to look at the S&P 500, and I'm going to tell you in a little few minutes why this is a worthless index. Okay, why we shouldn't even pay attention to it, why you shouldn't invest in SPY. I said invest, not trade. You can trade SPY, but don't invest in it. And why it's just completely just skewing everything about the world. Okay, I think I mentioned this the last time. The S&P is leveraged to everything right now. Everything. The consumer index, consumer confidence, everything is leveraged to the S&P 500, and it's an absolute disgrace. Okay, but let's start with the inflation number, which came in worse than expected. And I told you guys that inflation, all these numbers out of the government are skewing positive. Okay, and that's crazy. Okay, and the expectations were too crazy. Everyone thought we're going to have rate cuts, the Powell, this and that. But let's look at the data. Okay, the data is going to tell us everything, folks. And here we go. Let's start with the data. And what do we see here with the data? First things first, we see, okay, overall, okay, we see food. Okay, food jumped in December, okay, 0.2%, double that in January, 0.4%. Now, food, by the way, folks, the overall index for food has not gone down, meaning that, when they tell you, oh, inflation is coming down, that means milk is more cheap. I heard some morons telling milk is cheaper, eggs are cheaper, meat is cheaper. Bull. Okay, these things have gone up, but they haven't gone down. There's no deflation yet. No deflation yet. So prices are still high. And now they're accelerating higher. Okay, this print in January was the highest individual print in 6 months. Food. Okay, then we look at something that's going to reverse. Gasoline. Okay, they tell you that gasoline was down 3.3%. Okay, that's a big number. Folks, have you gone to the gas station recently? I'm gonna comment on this again, but if you've gone to the gas station in the last 2 weeks, you know that gas prices are going higher. Okay, higher. And then we've got electricity, which everyone uses, again, double the rate of growth from 0.6% to 1.2% in January. I mean, folks, I'm not making these numbers up. These are the same. These numbers were coming in as these morons early in the year were telling you that the Fed was going to cut because inflation was tamed. Okay, and then we've got just continuing shelter. This is rent going up, especially in places like New York, which New York skews all the numbers. Medical care going up. So what this is telling you, folks, is that everything that we use day to day is going up. Okay, it's going up. And I mean, you got to question why these pundits and Wall Street were telling you inflation is defeated. Even Powell, okay, he came out during the whole bullish time and said he sees the Federal Reserve remains on track to cut rates at least 3 times this year. Now, he said that because all the questions he got. I told you, my opinion of Powell is the guy's a dove and he doesn't know what he's doing, but give him some kudos, okay? Even though he says that, remember, this is the same moron who said inflation is transitory. Okay, he said it, and he's never going to get away from that. but he's cautious. He's very cautious because his legacy's at stake. And why is he cautious? Well, look, folks, back in the 70s, this is before Volcker, the moronic Fed, when inflation came off, they cut rates. They started cutting rates. And inflation wasn't conquered. It actually ripped higher again, which caused the change of the Fed. And you had Volcker come in, and basically that was it. He squashed it, but he squashed the economy as well. Now, Powell, on the other hand, doesn't want to get taken out. At some point, he will get taken out because he's a moron. He doesn't know what he's doing. But he's trying to be cautious because he doesn't want he's all about his legacy. The guy's rich, doesn't care. It's all about his legacy. So at the end of the day, why do I show this chart from the 70s? Well, because inflation, folks, in all indicators is sticky, as we see here. It's sticky. It's not trending lower. This is sticky inflation. This is stuff that sticky inflation is things that we all use every day, including food and energy, all of these things that we use every day. This stuff's sticky, okay? And there's no doubt that this stuff continues to go higher. Okay, continues to go higher. And you got New York is the media capital of the world. Okay. And here's an inflation map. Now this is also garbage, but this shows a little bit. So you're seeing that in parts of the Northeast, inflation is lower than the South and the West, etc. Now, this makes no sense because have you ever been to New York recently? Have any of you guys live in New York, have been to New York? I just came back from New York. I used to live there. I moved away. Now I'm back in New York. And man, you talk about inflation. You can't go to a restaurant without spending with another person spending $400. Okay. Taxis, you get in a taxi, they charge you $6 for the taxi that moves 2 feet. Okay. Hotels, last year were through the roof. They've come down a little bit because there's no demand. There's too many migrants running around for stealing and everything. So the place is a mess, but everything is incredibly expensive. And they want you to think that regionally inflation is lower in New York than other parts of the country. Give me a break. Okay, this is the media capital of the world. This is where all the propaganda comes from. New York is like Pravda, Soviet Union, all fake, all lies. And this is where the pundits live. This is where Wall Street is. So this is why they come out with stuff like this, which really, really makes no sense. Okay. Now let's look at real rates. This is the only thing that does make sense. This is you can't fake this. This is the 10-year minus inflation. Okay. And we've got positive rates, real rates. Finally, we had negative rates for a long time. That's insanity when you have negative rates and you don't have a recession. This is why many people were calling for a recession. That was there, but the fake news, fake data said it wasn't there. But the bottom line is, when you have big spikes like we've had in interest rates, which cause real rates to go higher, there's usually some kind of crisis, some bubble has popped. So we are living through right now a popping bubble. We're not going to know the bubble's popped till it's too late, but some bubble has popped somewhere. Okay, and there's trouble ahead. But again, the data right now, the problem we have today is the data is not reliable. It's not reliable. Okay. And let's go back to gasoline, because again, this is going to tell you the future of the CPI. Okay. WTI and now gasoline futures are spiking up. This is a 3-year chart. We're seeing it break out to the upside. It's just the beginning. Okay, you could see again, go to the pump. Don't listen to the morons. Go to the pump, and you could see gasoline prices higher. Okay, gasoline demand in 2024 is up versus previous years. Okay, it's up, and it's going to continue to go up. Why is gasoline demand up? Look, your guess is as good as mine. People want to drive. People don't want to sit around. And by the way, they're not driving electric cars, because there's no gasoline demand when everyone's driving electric cars. Okay, so the bottom line is that WTI is going up, gasoline is going up, and this is not good for the CPI. Okay, so my expectation is CPI is going to be hotter again the next time around. Okay, so let's turn what we talked about. Let's turn to the S&P 500. Historically, okay, this is key. Historically, the S&P 500 and stocks in general, but let's look at the S&P because everyone in the world only looks at the S&P, is a leading indicator for the economy. Okay, that's what everyone talked about. Stocks go up 6 months before the economy. Well, folks, take that and throw it in the garbage. The S&P is no longer an accurate indicator for the economy. It's completely been manipulated. It's not there anymore. And the main reason is passive investing. Okay, quantitative investing. Algorithms dominate all the flows. Okay, Wall Street likes that. They want you to buy funds. They want you to buy indexes. They don't want you to buy individual stocks. Okay, so because of that, because everyone's piling into indexes, you're not getting the free flow of stocks. You're not seeing stocks to go up because of earnings. And this is where previously you've had stocks being a leading indicator. So let's look at here. You've got in 2023, the number of stocks that have underperformed the market. Okay, this is all-time high. Underperforming the S&P. Over 70%. This is, again, as you can see here, unprecedented. It's never happened before. That tells you that the S&P 500 is going up. Again, we know why. We know why. It's a very small percentage of stocks. It's the Magnificent Seven. And it's leaving everything behind. So the skew basically is that this no longer represents the economy. So no one sees a recession because the market's going up. They're leveraged. They're focused to the market, and they shouldn't be because the market, since passive flows now over the passive AUM, passive flows much more than, let's say, stock pickers. It doesn't matter anymore. The S&P 500 index is a worthless indicator. It's gone. Okay, because as you can see here, all of the flows are going into tech. All of the flows, not just some of the flows, all of the flows. All the flows the last 12 months, 100% tech. In fact, you could say it's more than 100% of the flows going into tech. Okay, this is not healthy. This is the Magnificent Seven. This is why 7 stocks are leading the way. They're all technology stocks. This is the most unhealthiest market we've ever seen. Okay, and then we look here at the real bull market and bear market. So the S&P 500 obviously breaking out to new highs. Is it going to go down? It went down today, but who knows? It doesn't matter anymore. It's irrelevant. The S&P 500 is irrelevant. And it's in a bull market. But look at the Russell. This is Main Street, right? The blue S&P 500 is Wall Street, and the red or magenta is Main Street. So the elites, the rich, are telling you everything's good in the economy. Don't worry about it. You watch Kramer. Oh, the economy's great. All these people tell you how good things are. Joe Biden, the White House, they have such a great economy. But the reality is, Main Street, individual stocks, the S&P, the Russell 2000, small caps, disaster, bear market. That's a bear market. Okay, it's not good. The economy's not good. Okay, and let's look at correlation. This is another thing that really is crazy going on. So correlations are very simple. When everything's correlated, it goes to 1. When everything goes to 1, that's not good. That means stocks are all going in the same direction. What you want is here, that you want incredible, you want very low correlation. Very low correlation means you can make money by picking stocks. So we're in a situation that I've never seen before. We have indexes at all-time highs, and yet correlation is very low. That means that you could make more, you should be able to make more money picking stocks than buying an index fund. That's not the case today. Okay, not the case today. And, talking about small caps, if you look at valuations, and I've showed this before, I mean, this is, again, all-time high valuations going back 23 years and even beyond. We've never seen this before, folks. This shows how dangerous and how out of whack this market really is. Okay, and then you look at these Magnificent Seven and you look at earnings. Now, this is Wall Street consensus. These are earnings for the future. I don't believe any of it because, again, the analysts are biased. Wall Street banks are biased. They're telling you that here's the growth out of all these Magnificent Seven, and an average 12%. The average company, okay, is going to grow 3%. The S&P 500 is 5%. Look at Apple, by the way. Apple was at one time the biggest company in the world. It's going to grow in line with the S&P 500. With its multiple as the way it is, Apple's done. But I don't believe any of this. I don't believe any of it. I don't believe any of it because it's the people that are telling you that these earnings are going up. Don't believe them. So S&P doesn't represent the economy. It's a worthless index. Okay, it's too top heavy. There's no real economy in it anymore. So you can trade it, hold it, whatever, but it's a worthless index. Okay, the definition of stagflation, folks, is high inflation and low growth. That's where we're entering right now. This is the beginning of it. But should you sell stocks? No. No, because they're going to take these things as high as they can go until they can't. Maybe today showed it, but I don't know. Doesn't matter. So stay away from the S&P 500 as an investor. And man, as a long-term investor, you got to be very, very careful out there.